Now, this week, the Goliaths of Wall Street have met their David. The Gamestop shares frenzy has seen a surge of stock purchases by small investors lead to losses in the billions for hedge fund pros. But now there's anger on the online forums where this rebellion was coordinated after brokerage apps took action to stop it.
They're placing their bets. A group of small-time speculators, not professional traders, have been coordinating the purchase of GameStop stocks in online forums, even though the retailer is virtually broke. This has been causing share prices to skyrocket. At the peak of the frenzy, the stock had risen 2,500% from its price at the start of the year.
Well, it played out that those who are pushing the share prices higher are on the winning side, but those hedge funds that are short the stock, that believe that the price will be going down, are getting squeezed. And so the concern is that maybe we end up with some hedge funds that have financial difficulties.
GameStop's rising share price has already caused problems for some short sellers who had bet that the nearly bankrupt firm's stocks would drop in value. Now every penny they increase means a loss for the short sellers. It's not all good news for the individual traders. Investment platforms have started to limit trades on GameStop, putting pressure on the price. Whether the social media trade can regain its momentum is as yet unclear.
Well, let's discuss this with our financial correspondent Ashutosh Pandey, who joins us from Frankfurt. So we've seen the online brokerages take action on this, but why have they actually felt the need to do that?
To begin with, Robinhood, which has been the hottest hunting ground for these day traders all through the pandemic, they say that it's to save the company and the traders from volatility. Remember, the financial requirements for the companies go up, for the brokerages go up when there is so much of volatility. For example, they have to keep more money, more funds with the clearing houses. So that's one of the reasons that the Robinhood CEO has mentioned.
So what's the reaction to these restrictions been?
Well, there's been a furious reaction from Robinhood users and also all the other daily traders. They feel that the company is now changed its sides and it is siding with the financial elite, the hedge funds, the bigger financial institutions. So that's where they are furious. In fact, they've taken to Twitter to rile against the company, calling it, well, not Robinhood, but robbing the hood. That's how they put it. There's also concern from the U.S. lawmakers. U.S. lawmakers have said that this is unacceptable, especially given that hedge funds are being allowed to trade, but daily traders are being blocked from making trades. And the daily traders have also sued the company, but legal experts do see that there is not much that they are going to gain from it, given that these brokerages do have a lot of powers to limit trading. It's all mentioned in the agreements that the customers signed with the brokerages.
Still another day of trading this week on Wall Street. Do we know where this saga is going to go next? Well,
to begin with, Robinhood has said that it's going to ease some of the restrictions. It has, in fact, tapped into its credit line to be ready for the burst in trading that's going to happen when those restrictions are eased. But the broader saga, it's very difficult to say which way it is headed. How are the regulators going to weigh in? How are they going to limit such behavior from daily traders, given that this is actually leading to a lot of bubbles in assets which are actually deemed to have run their course? But on the face of it, when you look at it, what the daily traders are doing, there's nothing illegal about it. So it's interesting how the regulators are going to tackle this issue.
We'll keep watching. Ashutosh Pandey, thanks for joining us.